So we have an amazing panel for you today here. We have Sabina, Dziurman from the European Bank for Reconstruction and Development. And we have Ioannis Kaltsas, Head of Division for European Investment Bank. We also have Takis, Solomos, First Athens Corporate. And we have Katsanos from Levant. And last but not least, Thor, Talseth from Amerra Capital. All, ladies and gentlemen, have invested in Greece for some time. So they can tell us a little bit of the experience they've had up to now. And they will also give us a little bit of the outlook for 2018 and 2019 looking forward. So without delay, I will go to the lady first, and she can go a little bit through the experience that the BRD has had up to today investing in the Greek market. Sabina, the floor is yours.
Okay, good afternoon, everybody. We're the new kid on the block. I came to Greece in 2015. EBRD has been around for over 25 years, but Greece is a new country of operation. So we're still quite new. We had a quick start, established an office, hired local staff, and in the first 3 months, invested 320 million. A big chunk of that, obviously, was the recap of the Greek banks. Subsequently, we've built up to 1.35 billion, which is not bad going. It's exceeded expectations back at base in London, which is good. And we've covered a whole range of sectors. And I'm quite proud to say, from as small as a $3.5 million investment in Polefish, which is a polling application, which was done through our internal venture capital fund, to 188 million to support the privatization of the regional airports, and then several things in between. We've supported the banks a lot with securitizations, covered bonds, and what we call our trade finance program. In the corporate sector, again, we've done quite a few bonds, both Euro bonds and local bonds issued on ATHIX. And then finally, in everything else, which is municipal, privatizations and energy. Our focus tends to be, we're not purely commercial, we're not profit maximizing, although we do seek a profit, we have to demonstrate that it's sound banking, but we also have to have a story around any deal that we do. And that tends to be, we're quite heavy on environmental. We may look at green elements, even if it's in property and tourism, or backward linkages, so that small businesses are able to supply the large hotels and benefit from that tourism. So we always look for an angle, which we can normally find. I think we've probably got a couple of other things to sign this year, and our first will be in a property transaction, which I think is something we'll do more of next year. And then finally, I think next year, I say this, I've been saying it every year since I came, but I really do believe that next year will be the year of NPLs. And we're ready to support that in a variety of ways, either through services, participating in equity, or more importantly, I think, providing new money to those services if they want to restructure firms, or finally, co-financing acquisitions of portfolios for banks. So we're ready to do more business next year. I look forward to seeing you in Athens.
Thank you, Sabina. Thank you very much. Ioannis, if you want, you can take the floor.
Thank you very much. My name is Ioannis Kaltsas. I'm Head of Division for Greece and Cyprus, covering public sector and banking operations. I was doing actually the last 2 weeks an interesting exercise looking at the financing of the EIB throughout the history of engagement with Greece. In fact, EIB, its first operation in Greece was back in 1963. And during this period, in terms of 2016 values, the EIB financed 75 billion euros of projects in Greece. And I distinguish this in 3 periods, actually. The first period is from 1963 to 1981, when before Greece entered the European Union, which EIB financed about 15 billion euros. With the exception, was very active with the exception of the 7 years of dictatorship were not present. And then there was an investment boom from 1981 until 2008, where the EIB financed 45 billion euros of investments. And then from 2008 until this year, about another 15 billion euros. And we try to extract lessons, what we saw this period, and what we can deduce for the years to come. For example, during the period of 1981 to 2008, a lot of these investments, they went to the public sector. About 2/3 of these investments were co-financing, helping Greece to leverage structural funds. And in fact, with the EIB assistance, the Hellenic Republic managed to leverage this amount with a factor of 5. So in terms of the future, in terms first on the public investments, what we see is a number of big projects coming the next 3 years. After a period of relative hesitation, there was a period through the financial crisis where we saw Greece, the big projects kind of taking time to materialize. But we have to keep in mind that this will be the last period where we're going to have a generous package of structural funds coming to Greece. Post-2020, the picture for Greece will be different. So it's very important that Greece takes advantage of these funds. With respect to private sector, we also see through the privatization process that a number of big projects will move ahead. Tomorrow, our board of directors will take a decision for 750 million euros to go towards the top projects, for example. There are some mega projects that there will be coming in Greece and where the private sector participation will be very important. Having said that, banks like ours, EBRD, or other public banks, it is my belief, cannot do anything if the Greek financial system does not stand on its feet. Our involvement is not to substitute the Greek financial system. And for this, I will agree with Sabina that next year is the year of the banks. Actually, it's not only for Greece. In Cyprus, where I'm also responsible, the problems are very similar. The NPLs are even higher with respect to what the NPLs are for the Greek banks. So the Greek financial system and its stabilization, it is, I think, the big bet that we have to see for the years to come. And I'm optimistic about it. Actually, if I compare the climate, even in this conference this year, vis-à-vis the conference last year, you will, for those that you happen to be here last year, you will see there's a much more positive atmosphere. And there are some factors that indicate that things will remain positive. Tourism, we expect to be a good year, a new record maybe this year. We expect growth in Europe, and we do expect also, as I mentioned before, private investors, more private investors coming to the country. So there are some positive news, but the overall environment, we should not forget, does remain fragile. Thank you.
Thank you, Ioannis. We've heard two important, let's say, positions. We've heard that next year is going to be the year of the NPLs, and next year is going to be the year of the banks. We know banks, real estate, and NPLs are three very important subjects. We've heard these this morning, a lot of comments on that. I'm wondering, Takis, if you have a view on something which is maybe a little bit different than banks and NPLs. Please.
Thanks so much, Constantine. Actually, next year most probably is going to be also the year of the private equity in Greece, because there is a significant number of new funds that are going to be active in the market. We estimate that a total of around 500 million euros is going to be available in the market from private and from international financial institutions and private investors. So I do believe that next year is going to be a very, very important year for all, let's say, the supply chain of the financial system for the Greek market. My name is Takis Solomos. I'm a partner with First Athens. We are venture capital and private equity managers targeting investments in Greece. We started the private equity practice back in 2012 with our first Elikonos fund. This fund was established under the Jeremy initiative and was primarily funded by the European Investment Fund, which is a subsidiary of the European Investment Bank. And we started investing this fund back in 2012. We went through examining investment opportunities in about 300 projects. We invested 17 million euros, which is obviously a small amount, but it was very significant back then for the local market, along with the other 4 funds under the Jeremy initiative. We have invested these funds in 11 businesses. And the most important thing that I need to declare to this audience here today is that since we have started examining now the exits of our investments, I am very happy to say that there is a vibrant market from a buyer's perspective. So there are people that are interested to examine to buy out our investments, first of all, because there has to be a market in order to have a transaction. But the most important thing is that we are examining exits from our fund with very, very significant returns. Have already exited from an investment with a 16% IRR. We have a proposal to exit an additional investment that implies a 3 times multiple to our investment amount, which is very, very important for our trajectory to returns. And we are also in discussion for an additional exit that is going to imply a 20% IRR. So I'm very happy to say that there is a market in Greece for private equity. There is interest for, there is significant deal flow. There is interest for the exit. So when there is a quality investment, there is a market that people want to take it to the next level. And we feel that, as I said, 2018 is going to be also a very good private equity year.
Thank you very much, Takis. George, your organization invests more on public securities. Could you tell us a little bit of how your involvement with Greece came to be?
Sure. Thank you, Constantine. Honored guests, ladies and gentlemen. Levant Partners is an Athens-based investment management firm, but who have been investing in the EMEA region for a long time. It is a region we know very well and feel closely connected to both geographically and culturally. This has allowed us to follow some pretty spectacular crises over the years: the collapse of Russia in the late 90s, the collapse of Turkey in 2001, the Great Financial Crisis, and the Arab Spring. What we saw in all of these cases is that crises are brutal, as markets typically collapse by anywhere from 70 to 90%. But they also breed opportunity. Countries usually are forced to reform, and after a period of volatility, as these reforms take time to permeate, they enter the recovery phase. This is the most interesting part of the cycle, as returns at that stage can be huge. We've seen 900% returns in the case of Turkey, to even as high as 3,000% in the case of Russia. We actually believe that Greece is at this stage right now. So when the Greek crisis hit home, it was natural for us to get involved. Following the collapse of 2012, we raised close to 150 million euros in a separate mandate, and we were among the few early investors who bought Greek paper at 15 cents. In late 2014, and following a period of strong returns, we decided to return money to investors as we were getting worried about politics at the time. Currently, we have increased our Greek assets once again, and we're heavily involved with Greece, specifically on the equity side, as we believe that the market is currently entering the recovery phase. Thank you.
Thank you, George. To Thor, you're a managing director at Amerra Capital, so you've already invested in the Greek economy, in the Greek market. Could you tell us a few words of your investment and how this came to be?
Sure. So Amerra Capital is a private equity fund based here in New York. We manage $2 billion on behalf of US pensions and endowments. We invest exclusively in what we call up and midstream agri and aqua businesses. So very focused niche. We believe that aquaculture as a sector is attractive. We are currently invested in aquaculture on 3 different continents, and we see that the increased demand for seafood is not going to stop anytime soon, and we want to be a part of that mega trend. Greece has some unique advantages when it comes to aquaculture from nature's side. Great locations, clean water, stable water temperature, and so on. Because of this, we invested in what we consider well-managed, well-positioned company called Andromeda that is farming fish both in Greece and in Spain. When we invest, we typically invest in a platform company and support the company with capital and whatever it might need to continue the growth. So Andromeda is our platform company to grow in the aquaculture sector in the Mediterranean region.
Thank you, Thor. We've done a full round. Back to the lady close to me. Could you tell us a little bit about the funding mechanisms of how funds are deployed for the EBRD, and what are the opportunities for 2018? Where do you think the market is going? What are you looking at mostly as a priority?
Well, we tend to be demand-driven, so I suppose looking forward, I see the privatizations. We'll try and support more of those. As Ioannis mentioned, there's a huge transaction with TAP next year. We'd love to get involved in agriculture, but generally we find the company is very small. I think it needs some consolidation. So if there were someone to come in and drive that, we'd like to look at that. And then, as I said, probably more in the renewable space. We've already done wind, but we'd expect a little bit in solar and biomass, as well as more wind farms next year. And then finally, NPLs and some more covered bonds for the banks.
Thank you, Sabina. Ioannis, what is your outlook for 2018 for the European Investment Bank? And also, if you could touch upon a little bit on the challenges you face or you expect to face for next year for the Greek economy.
I just would like to continue a point by George Katsanos. He mentioned about the crisis. I'm teaching in the University of Luxembourg, so I asked my graduate students to look into the Greek financial crisis and find a comparison with other financial crises in developed countries. There is no precedence of a deeper crisis than the Greek financial crisis. Being in New York, we could compare it with the Great Depression. And indeed, the Great Depression, somebody can argue that for a few percentage points, the decline was steeper. Having said that, the Great Depression didn't last the period that the Greek financial crisis lasted. And why do I mention this? I mention this that after so many years of a deep financial crisis, it is natural the economy to come up. So there will be investment opportunities. The EIB will do about 2 billion euros, a little bit more than 2 billion euros of investments this year. We expect to maintain for the next few years about this amount, 2 billion euros a year. This is our business plan. What are the challenges for the private investments? I hear very often the debate about taxation. Taxes are very high, so this is why private investors are not coming. Actually, with our discussions with the private investors, what we find is that this is not the biggest impediment. What we feel that it holds them more often is the non-financial costs, the uncertainty, the regulatory environment, a special way of doing business in Greece. And I think if we have to talk about challenges of the Greek economy to go faster, this is what we have to see first, and not and not the taxation. I will not argue, of course, that lower taxes would, of course, boost the economy, but I don't believe that this is the biggest problem currently for investments.
Thank you very much. Takis, back to you. You mentioned significant deal flow opportunities for 2018. Could you walk us through a little bit more of your outlook for 2018 and 2019, please?
Definitely. We are investors in the SME sector. We are now raising a second fund that we estimate that is going to close around 60 to 65 million euros. That's going to target more or less all the sectors of the Greek economy. And we feel that on the SME front, there is a significant opportunity to invest. We do feel that there is a significant number of Greek businesses that have gone through the crisis with positive results, growing companies that they target exports, and these companies need at this time more equity rather than additional debt. So from a private equity perspective, we feel that there is an excellent opportunity to identify companies that are high growth, and they will utilize this kind of capital to grow further outside of Greece in the export markets and taking Greek companies and services around the world. And we feel that this is going to create significant returns. And in that, by raising now this capital, we have gone through tens of companies, and we have identified at least 5 to 6 excellent investment opportunities that should be financed in any country of the world, and not that are related with the Greek economic crisis or anything like that.
Well, thank you very much. George, back to you. You also have a plan for 2018, 2019. Could you walk us through your views on that, please?
Actually, the short answer is that we're very bullish on Greece. We believe that after a period of volatility, 2018 will be a seminal year of great improvement for the country. In fact, in light of recent events, we may say that things are moving in the right direction faster than anyone would have thought possible. Let me draw your attention to what happened last week. It was the first time that the Greek government managed to complete the staff-level agreement ahead of time. Even the most optimistic commentators were expecting such an agreement to come towards the end of the first quarter. Incidentally, anybody remember what was the delay in the second review? It was about 8 months. So the main message here is that the country, things are changing in Greece. First of all, the country is going to be growing meaningfully again for the first time, let's say in a decade, at 2.5%. Unemployment is also continues to fall. Over the past 3 years, the Greek economy has generated close to 200,000 new jobs, 90,000 of which in the current year alone. Also, in 2018, the country will exit the memorandum program, and debt relief is also in the cards. Another important point we feel it's important to mention is that populism is finally dead. A leading think tank estimates that around 62% of Greeks believe that the crisis was caused by Greece's own structural problems and not some foreign conspiracy. And actually, I want to try a new growth model. 84% of Greeks support job-generating FDI, while 55% support shrinking of the public sector and reducing taxation even at the expense of entitlement benefits. So looking at the markets, equity have collapsed by anywhere to close to 90%, and the market actually looks like the mirror image of any major market in the world, which might be at all-time highs. Greek assets rank among the cheapest and most depressed assets in the world right now, despite double-digit free cash flow yields and the huge earnings recovery potential of Greek corporates. Finally, we think it's very important to note that Greek companies have been operating under a hostile environment of collapsing demand, lack of credit, capital controls, and have been forced to reorganize, deleverage, and become super efficient. It is fair to say, ladies and gentlemen, that management teams of Greek companies have become masters in navigating adversity. We think that their talent, creativity, agility, and experience are world-class, and this is certainly not priced in the market right now. So these are the main reasons that make us very bullish on Greece, and we believe that Greek assets are probably a unique investment opportunity right now. Thank you very much.
Thank you, George. Thank you very much. Thor, back to you. Please let us know also what are your growth opportunities, let's say, for 2018, and what are the challenges you expect to face going into the new year? What are your plans for the year coming?
Yeah. So I would say that as an owner of a Greek company, we have been well received and supported by authorities and the banking community. We see from the global aquaculture industry that in order to create a successful, profitable aquaculture industry, you need to have a close cooperation between the industry, the political and regulatory authorities, and the banking sector. Without this cooperation, it will not work. And we see that there is a great interest from both the regulators and from the banks to fully understand what is needed for the aquaculture industry to be successful. Aquaculture is a highly regulated industry, so we need to play together in order to be successful. We see that this can improve in Greece, as it can do in most countries, and we will play an active role and be proactive in making sure that we will find a platform so that the Greek aquaculture industry can grow going forward.
Thank you, Thor. We have a few minutes left. If you have any questions, I think it's the time to ask the lady and the gentleman on the panel. If anybody has, gentleman, poster, please go ahead. Microphone for the gentleman, please.
This question is mostly addressed to Mr. Solomos and Mr. Katsanos as culturally Greek investors in the Greek market. Do you feel that the reform program, the adjustment program that is coming to an end in 2018 has addressed all the real issues that make Greece or might make Greece an attractive investment destination, or would you see additional areas where a local program of reform, something that is owned entirely by domestic policy, is necessary in other areas, and what would be those areas?
George, would you like
Takis, do you want to go first?
Yep. Thank you. We feel that there have been significant steps towards the right direction so far, but of course the Greek market needs a lot of time for these reforms, first of all, to get to the actual economy. And of course, they need to be complemented by some, let's say, additional measures, in our opinion. So, for example, we do feel that there should be some taxation incentives for investors, and we believe that the current taxation levels are not really sustainable. But of course, Mr. Tsipras only recently mentioned that in 2019 the government will start examining some taxation initiatives for investors, but also for the corporate sector in Greece. So, just to reply directly then, we do feel that there have been significant steps to the right direction, but private investment and foreign direct investment need to be encouraged even more from a fiscal perspective and a taxation perspective.
I would also agree with Takis. I think the macro reforms are almost complete and done. Where we need to do some work, I think it's on property rights, legal framework, and we need to also expedite the private investments.
Thank you, George. The gentleman.
Are there any interests on the part of the big technology companies to invest in Greece, either building facilities there or investing?
So big technology invest in Greece. Takis, you want to take this as well?
Look, I mean, Greece has not really been renowned the last, let's say, decades for its technology. I mean, Greece is not Israel, obviously. However, having said that, we have seen the last 5 years a significant increase in the development of jobs related with technology. So there have been significant companies that have, out of Greece, have expanded around the world with technology projects and programs, and actually we have seen some significant exits from venture capital-backed technology companies in Greece. But having said that, we don't see Greece at this point that has attracted really the likes of Microsoft or Apple or this kind of global corporations in developing significant presence in Greece from a technology development and value addition perspective. But this is something that we feel that it has to be identified, because for a number of reasons there have been significant quality of Greek engineers developed in the local universities, and we feel that now with the initiative of the Equi Fund, which is a different private equity initiative primarily of the Greek government and the European Investment Fund, there are going to be some funds that are going to target university level funding for students. And we do feel that all this, let's say, activity is going to increase the awareness of the multinational corporations for talent in Greece, and hence investment in this kind of the equation.
Thank you, Takis. Actually, it's a very good question. I wonder if, Ioannis, do you see technology investing into Greece? Are there any proposals related to technology investing coming into Greece from your perspective?
No, I agree with Takis. I think there are many small businesses, technology businesses, where they hire very talented Greek engineers, graduates, and they have an export-oriented profile, so they provide services outside, mainly outside Greece. But we do not see, and actually we do not expect to see large corporates to come, technology corporates to come to Greece anytime soon. Being based in Luxembourg, where you have a lot of corporates having the headquarters there for Europe, I think there are other incentives that they attract these kind of corporates to establish their locations, rather than the quality of engineers very often.
Thank you very much. One or two other questions. I think we can go for lunch. Everybody's probably tired from the morning. Thank you so much.